Talking about Maruti Suzuki Q2 FY22 performance, the numbers this time were a mix of a good and a bad. When I say bad, then the profit is down 65% on a YY basis, margins at a 5-quarter low at 4.1%. But when I say good, a number of 2,000 pending orders have been reported by the company by the end of this quarter, which is quite encouraging. But now let's get deeper, and firstly, let's start with the numbers being reported by the company. The headline number, the revenue, saw a jump of 9.6% on a YY basis. It was above the ET now estimate. The company clocked in a revenue sales of around 20,539 crores. But apart from that, all the numbers, that's EBITDA, PAT and margins, were a sheer disappointment on that front. EBITDA was down 56% on a YY basis at 854 crores, while the margins were at 5 quarters low, the lowest that the company reported in the past 5 quarters. It has now slipped down to 4.1%. Two factors have been impacting the margin numbers. Firstly is the chip shortage situation, where the company highlighted that they have estimated that they lost around 1.2 vehicles production because of the chip shortage situation, and that mostly caters to the domestic models, and that has been impacting the volumes of the company. And secondly, the commodity inflation has been hitting hard the margins of the company, and both of the situation, the company is of the view that that's an unprecedented situation, and they are waiting for more clarity on both of these fronts. While talking about the raw material cost, they did say that the steel prices saw declining a bit, but now recently they have started going up again. So going forwards, they will be watchful of how this number pans out to be. But in the bottom line, if you see, that's a decline of 65% on a YY basis, with profit figure of just 475 crores versus our expectation of 754 crores. So all in all, not a good set by the company this time. But what is good is, like I highlighted, that they say that they have around 2 lakh of pending orders. And one more comment coming in the presser of Maruti Suzuki, where they say that they are hopeful that the November production number will be higher in the times ahead, because we have been seeing for the past so many months Maruti Suzuki has been cutting down their production targets because of the commodity inflation, not on the commodity inflation, because of the chip shortage situation. But now they are saying that they are hopeful that they will be able to clock in more sales in the month of November than they did in the previous month. On the demand front, that holds very strong. The waiting periods for cars differ. There is a huge rise in the material, but all in all, they say that because we are seeing quite many price hikes happening in the fuel cost, not only on the petrol and diesel, but also the natural gas is getting expensive. Maruti Suzuki is of the view that the demand is still intact, and as of now, they are not seeing any dampening on that front. On an whole, they are targeting to selling 2 million cars annually if things normalize and they get back to normal production levels. On the EV front, we were quite hopeful, and we have been waiting for Mr. R.C. Bhargava to come up with a comment like, when can we see Maruti Suzuki come up with their EV sales, when all over India we see this quite a buzzing thing. From Maruti Suzuki, it's coming that no matter what, the companies are selling EV, but it still lacks proper infrastructure, and they don't have any near-term plans on the EV. So all in all, if you see, the numbers are very disappointing, but the commentary that has been given by the management is a bit encouraging, and the order book is still intact, where the demand is still holding strong for the company.